The South African Chamber of Commerce and Industry's Business Confidence Index has improved in the first quarter of 2022, increasing by 2.3 index points. And this is 1.2 index points higher than the first quarter of last year. The general trend in business confidence during the first few months of 2022 remained positive. While the BCI showed signs of recovery in the first few months of the year, the unexpected conflict in Russia-Ukraine added to global business uncertainty, causing the BCI to slow in March. Now, factors that contributed to the improved business climate were a higher volume of merchandise imports, an increase in the real value of approved building plans, and more new vehicles sold. The main sub-indices that weighed negatively on business confidence in the short term were lower merchandise export volumes, rising interest rates, and the lower JSE share prices. On the other hand, the high costs of fuel and electricity and an inconsistent energy supply contributed to business uncertainty. So let's talk now to Managing Director of Brand Finance Africa, Jeremy Sampson, on some of the brands that have really been of benefit, some would say, to the economy, adding a bounce, and some which will yield some more benefits in the months ahead. Jeremy, it's lovely to have you with us. Thank you very much for your time. The theme this year, of course, was SA brands driving the economy. Of course, we can't overestimate just how important how important this is to our economy, which is, in a situation where growth is limited. We've got all of these, sort of compressing factors in our economy. Just share with us, how these brands have done it and how.
Hi, Aman. Good to see you again. Good to be with you. Yes, I don't think everyone quite realizes how powerful, important brands are and the role they play in our lives. When you get up in the morning, what's the first brand you think of? Do you grab some toothpaste or whatever? And this is where the South African brands, we often feel, are under-celebrated, and they need to be celebrated and congratulated. Now, for the last 8 or 9 years, we've produced the top 50. This year, we've gone for the top 100, and there are some very interesting entrants in the last 50, if I can put it that way. But what we're showing is that brands like MTN and Vodacom, the telcos, are still incredibly powerful. The banks are very, very powerful as well, with FNB just being edged out by Standard Bank as the top bank, which is the first time in 4 or 5 years. ABSA very close as well, and then Nedbank not that far away. And then the retail side, and COVID-19 has actually been very interesting, the way I'm sure all of us remember how retail has changed. We've now got scooters buzzing around the place and deliveries. And so ShopRite Checkers has done very powerfully, but also Woolies and Pick n Pay are going strongly. In that bottom 50 as well, it highlights the fact that South Africa has a lot of mining and resources companies. And whilst their brands are not that valuable compared with, shall we say, the telcos, it shows the importance of reputation and brand, whatever business you're in. Because even the mining houses have to have investment managers. You need to talk to potential staff, etc. So everyone is realizing that brands and reputation are increasingly important in the world we live in.
Absolutely. We talk a lot about political brands and their reputations, and the missed opportunities in not managing their brands well. But I want to come to, when you talk about the power of a brand, when we consider the way that ratings agencies view a country, and a lot of it is perception driven, when you see big companies thrive, they're able to build legacy, and they have a sustainable strategy and growth path in the country, that is an incredibly good signal for other people to come in and to invest. So I want to break it down. You talked about banking, retail, and mining. Let's maybe start with banking. You mentioned Capitec becoming South Africa's strongest brand, and a lot of people bank with Capitec, and we know the story, the origin story of Capitec in South Africa. What are just beneath that headline then? Why is it that they are so strong? Why is it that Standard Bank was able to edge out FNB from its top spot?
That's a complicated question, Iman. But basically, it's because we, the consumer, want them. We, the consumer, like the way they project themselves. Capitec's only been around, 21, 22 years, compared with some of the big banks that have been around well over a century. And Capitec positioned itself in such a way that the man in the street, if I can put it that way, found them very accessible, very easy to deal with, a very simple transaction, and in a very cost-effective way. And that's the reason we talk about brand strength. Is it's almost all the non-financial aspects of a brand, how it's perceived, its reputation, how it behaves in the community. And you touched on things like ESG. The way brands behave generally towards us and treat us is increasingly important, because we all have choice. And if we don't like something, we can move elsewhere. And that's where banking, I think, is so competitive at the moment, that they all realize if they don't hang on to you, you can easily just move next door, or perhaps you'll open a second account, or some people even a third account. So this is where you've got to be on your game all the time. And Capitec has done very well. Standard, as we know, has had a rebrand in the last 18 months, but FNB is incredibly strong as well. And we should be proud, especially of our banking sector.
So these homegrown brands, I think would really sort of capture the imagination when you think of Checkers, how well they were able to be agile and innovate during COVID, and people were able to get their groceries right at their door, leading the way before a lot of people really caught on. And then MTN, even though, the situation in Nigeria in terms of the introduction of new regulations there slowed their growth, they were still able to come out really well. And these are homegrown brands.
Well, you're absolutely right. And you've used two very important words there, Iman: agile and innovative. We had a panel discussion this morning at the launch of the brands at the Johannesburg Stock Exchange. And I must say, it was nice to be back at the JSE, our first time in 3 years, and they're hosting it brilliantly. But we were talking about the changes that have happened in the last 2 or 3 years. And Tulani Sideko of Standard specifically said, you have to be agile. He's absolutely right. You can't sit on your hands all the time. You can't be slow all the time. And this is where I have to say that the private sector is so much faster than government. And this is where we need, I would argue, more involvement of the private sector to make everything much more agile, much more fit for purpose, and much more innovative as well. Government is too slow.
Yeah. Now, Jeremy, this next question might not necessarily be for you, but I'm going to ask it anyway. Given that there's such goodwill then, they're making money, they're striking while the iron's hot, they're able to do some expansion and growth and, all the good things that you just talked about. At the same time, it happens in the context of South Africa, where growth for many communities, homes and households is, non-existent to very little. What kind of role, because surely there's an opportunity there, right, for them to do something exponential that begins to create more access, make products that are more viable for families that are struggling. What is that opportunity, in your estimation, that exists for them to build on what they have right now?
Very interesting question. And I think quite a lot of the major companies are actually doing a lot already. I know the mining houses particularly get upset when people say, aren't you doing enough, the community? And they say, but we're putting in the housing, we're putting in the infrastructure, we're supplying the electricity, which, the government should be doing. And this is where I think a lot of people and the banks are helping communities and helping generally. They're in a bit of a catch-22 though, because as we know, if these companies start trumpeting what they're doing, people would say, here you are spending a little bit of money to help someone, but you're spending even more money to market the whole thing. But I think generally there is a lot going on, a lot very good, but they're trying to keep it more below the surface. And this is where I would suggest get one of the top CMOs and try and get them to talk about it. But they can be very shy at the moment because some people got out of line and were heavily criticized, and quite rightly.
Well, thank you so much for talking to us, Jeremy Sampson. Every year, Brand Finance puts out 5,000 of the biggest brands to the test and publishes nearly 100 reports of some of the biggest brands across all sectors and countries. And South Africa's top 100 most valuable and strongest brands are included. And we were just having a discussion about which one. So really appreciate your time and analysis. Jeremy Sampson, Managing Director of Brand Finance Africa.